While Tesla stock may be declining now, some people expect that by next year, the business's stocks would skyrocket. There are also those who anticipate that the stock will increase significantly once the company announces Q4 results early in the following year. Tesla stock is currently trading at about $150 per share. Investors are worried that the company's stock price will continue to drop despite numerous issues plaguing the company today. According to a recent article from Barron's, Tesla stock could feel more pain next year because there may be too many EVs. Bears who claim that Tesla stock will continue downward from here on are definitely not ones you want to miss. The article did a good job of stating that there is unquestionably increasing competition in the EV market, and even venerable automakers are beginning to switch from conventional to electric vehicles. Tesla is one of the top 3 investments for 2023, according to American multinational investment management and financial services firm Morgan Stanley, which cited the company's potential for future growth. Despite recent issues with the price of its shares, Tesla, the automobile stock, is still viewed by many experts as a chance for value growth. Congressmen in the United States have not yet sold their firm shares, despite recent articles from Forbes and the Motley Fool making similar claims. One of Morgan Stanley's top picks for 2023 is Tesla. When Morgan Stanley selected Tesla, CNBC first reported on it, and the analyst emphasized the investment group's optimism. Morgan Stanley expressed confidence in Tesla's near-term future and kept its price objective for the company at $320, even though it believes that 2023 would be a very difficult year for the EV market overall. We think Tesla's competitive advantage may grow. During the Q3 results call, Elon Musk, the CEO of Tesla, voiced optimism for a record-breaking Q4, according to Morgan Stanley. It's important to note that we anticipate selling every car we've ever produced in Q4 due to the great demand we have. In the Q3 results call, Tesla CEO Elon Musk stated that the plants are operating at full capacity and producing every vehicle the company produces. As our factories ramp up production, we're looking forward to a record-breaking Q4. So it really looks like we'll have an epic end of year. So Q4 is looking extremely good, says Musk. Tesla plans to push global production of its best-selling Model Y and Model 3 electric vehicles sharply higher in the fourth quarter and build on that growth. In 2023, newer factories in Austin and Berlin are ramping up production. The global auto market is expected to rise by a factor of 10 in 2023 if the production ramp-up proceeds as planned, taking into account a 50 output increase for the full year. Musk clarified that Giga Berlin is ramping up production quickly and has reached a new milestone of producing 2,000 high-quality cars in a week. It is anticipated that Giga Texas will soon reach this milestone. Tesla has projected an ambitious aim to generate over 495,000 Model I and Model 3 units in the fourth quarter of this year. These two models make up approximately 95% of Tesla's total production. The CEO of Tesla, Elon Musk, also stated that the company has the second generation of manufacturing equipment for 4,680 cells in Texas, which is continuing to show great progress along with the original pilot line in Fremont. Particularly, a Fremont factory reached record production in Q3 once again. Musk also discussed the much anticipated Tesla Cybertruck, which is in the final lap of development. As a result, Tesla's production of 4,680 cells has tripled in Q3 compared to the previous quarter. Musk stated that we have completed the engineering for both semis and Cybertrucks at this time. A lot of people are still concerned about Tesla's growth in the near future, especially in relation to CEO Elon Musk. Many investors have claimed that Musk has become too distracted by his recent acquisition of Twitter. These worries were exemplified by Goldman Sachs' most recent Tesla stock price target cut from $305 per share to $235. Tesla head of engineering Lars Moravy added that we're still on track to enter early production middle of next year. According to Morgan Stanley analyst Adam Jonas, there needs to be some sort of sentiment circuit breaker surrounding the Twitter situation to calm investor concerns about Tesla. By looking at Tesla's financials and the company's future investors can get a better idea of the condition and possibly the opportunity of this stock. The distraction caused by Twitter needs to end in order to stop the stock slide. Tesla's foundations are strong. Elevated profits and profitability. More positive news is that it has low debt compared to its competitors, and that demand for all of its products is continuing to grow. Tesla, yet another opportunity to become a disruptor within the automotive industry with its semi-truck, which it has already started to deliver the brand's hotly anticipated Cybertruck, is finally coming to fruition with prefabrication work already occurring and the next generation of the brand's Golden Goose. The Model 3 is just on the horizon. Still, this does not necessarily mean that Tesla's stock success is guaranteed, as there are of factors that may affect the company stock, either for the better or for worse, as pointed out by numerous market analysts. And even Musk himself. The global economy is in a very precarious situation currently, especially as the U.S. Federal Reserve continues to push interest rates ever higher, battle climbing inflation. At the same time, supply shortages may only be getting worse instead of better, as the tension between the U.S. and China continues to build, leading to numerous tech suppliers facing challenges in producing essential parts. Anticipating a great experts in Q4 think that given the recent 3-month decline in stock prices, this is an excellent moment to acquire more stocks. Over 40, the value of Tesla shares has been lost so far this year, and they have lost nearly 1/3 of their worth. Many investors may be considering whether now is a good time to purchase an electric car in light of stock price decline. Maker stock, after all, is rising quickly despite declining shares. In fact, the third quarter revenue surged by 50-60 year over year, while the company's free cash flow increased by 148 over that time to reach around $3.8 billion. As a result, its cash position increased to $21.1 billion. Q3 saw exceptional results with record operating profit and revenue, as well as record free cash flow. Naturally, the robust quarter was driven by Tesla's soaring auto sales. Deliveries for the third quarter rose 42% year over year to 343,830. Tesla's impressive financial results in a difficult climate demonstrate the company's momentum and the potent secular demand. Positive angles for all electric cars. All of this is to argue that the stock's loss indicates a favorable moment to consider buying it when it fell below 50 this year. Analysts are increasingly saying that Tesla is a decent investment after losing roughly $300 in market value in just 2 months, despite the seemingly insurmountable obstacles that Tesla has faced this year. Analysts for the company feel that the share price slide has gone far enough. Wall Street has mostly remained bullish. Most Tesla analysts that Bloomberg tracks recommend buying the stock or something similar, and a rally of 57% in shares would be required to reach the average analyst target price. If the company's ambitions can be met, as most executives anticipate, Tesla as Q4 2022 looks promising. Production of Tesla vehicles would put the electric vehicle manufacturer on pace to fulfill CEO Elon Musk's target of 1.5 million units by 2022. According to internal plans, with a production rise of more than 50 for the year as of December 19th, 2023 would see Tesla surpass predicted growth in the global auto market by nearly a factor of 10. The median target price for Tesla Inc., as reported by 36 analysts providing 12-month price estimates, is $278, with a high estimate of $450 and a low estimate of $85. Compared to the most recent price of $149.87, the median estimate indicates an increase of 85.49. This information comes from CNN Business. Furthermore, 43 investment analysts surveyed currently agree that investing in Tesla Inc. Stock is a good idea. This rating has remained unchanged since December, when it was upgraded from a buy rating. In the short term, it is still fairly obvious that many tech stocks could fall further. But for those who are willing to hold on to their position until recession fears subside, they may be in for a fantastic opportunity. Of course, this includes Tesla, the industry leader in electric vehicle sales, which is still thriving in the face of many uncertainties. By 2023, be sure to subscribe to this channel in order to receive more content about Tesla stock.